Hello and welcome back to Bunnex Investment Group. And if you're new, our channel is actually dedicated to providing traders with trading strategies as well as tips on how to make more money within the forex market. So consider subscribing and join the family. So without wasting much of your time, we are going to be actually studying or talking about a strategy which will be on the H4 time frame. It's basically a strategy for swing traders, those who do not have much time to actually look at the markets. So basically there are only two things that you need to follow in order to use this strategy, and you'll be looking to actually take a trade and stay within that trade for weeks. So we are basically looking at taking a trade and usually staying in the trade for 2 to 2.5 weeks. So what do we look for? The first thing that we need to see is actually a completed cycle. And if you're new on this channel, we use the institutional market maker method, and we have a free course that is right in the description box below. So you may as well check it and have a glimpse of what the market maker method is all about. So the first thing, as I've said, is actually to get a cycle that has been completed. In this case, we can see that we had what we call level 1 from that point, level 1, then level 2, and then level 3, like that, right? So these are basically 3 weeks of rise. If you can note, with the period separators, we had 1, 2, and 3. So after 3 weeks of rise, the next thing is now to look for a pattern or a touch of the price on the 200 EMA. So my EMAs on the charts, which are basically cloud of indicators, I have the 5, 13, 50, and the 200 in white. So the 200 is the one that we are going to be using in this particular strategy. We need to see 3 levels of rise or 3 levels of drop on the H4 time frame, and then a bounce of price on the 200 EMA for us to enter. So in this case, we can see that the market came back to the 200 EMA, and our entry will be basically after candle closure above the H4 closure. So it means you are going to be looking at your phone or any trading device that you are going to be using 6 times a day. So in this case, let me see. Our entry and our exit, if it's actually euro against dollar, we'll be probably looking to get 150 pips versus or against a stop loss of 50 to 60 pips. So this will need you to have a substantial amount of capital to be trading this way. So after that, we now need to actually have another completed cycle, and within that completed cycle, we need to see a crossover of the 50 200 EMA. So that is the third thing that I should have mentioned. 3 levels going up or down, a crossover of the 50 200 EMA, and then a bounce on the 200 EMA, like that. And let's go ahead to see how it works. We can see that from there we had another drop. This was now a week of drop, and drawing or counting levels is a skill which requires a lot of effort to practice. We had a drop, then the following week was not a drop. Up to this point, we can see there was no drop. Then we had a choppy drop, right, which was this week, right? And within that drop, we had a 50 200 EMA crossover after having 1, 2, and 3. And this usually blinds a lot of traders, thinking that this was going to be a drop, but we had a consolidation since we did not break the low of the previous level. So we had 1, 2 and 3, and after that we had a bounce of price on the 200 EMA, which was going to offer us trading opportunities. So in our advanced course we talk about these stuff, but it will be refined. As you can see, we are actually doing it on the H4 time frame. You basically need to actually go back to the H1, probably look for proper order blocks to actually have a refined entry point. So from this point we did not have a cycle completion, but then later we can see that we had 1, 2 and 3, and then divergence of the market on the peak. Then from there we had a touch of the 200 EMA and price went down. So if I am to mark to actually clarify the move, it will look like this. This was the first drop, first week of drop, then the second week of drop. There are techniques to actually mark these levels with high accuracy. Then the third level like that. So after 3 levels of drop, we can see the market actually went back to the 200 EMA to give us an entry point. All right, let's continue to see how it went ahead. So in this case we can see that the market actually went up and down. So if we are to actually look at why this happened, we would see that this was now, it was now a third day peak. We now had the first daily level, the second daily level, and the third daily level. So on the third daily level we should actually expect to see consolidation, and using the same principle that we've just defined on the daily level, where are we going to move next using the same concept that we have talked about. So if you have the answer, you may as well comment it in the comment section below. That note, we come to the end of this video. Thank you for watching, and don't forget to check out our free course on institutional market maker method. I'll leave the link in the description box below.